Hello, this is the Trade Site U.S. Stocks and Futures Market Preview for the week beginning Monday, December 10th and ending Friday, December 14th, 2018. Hope you had a good trading week. This is the week of we're a week away from triple expiration. This is the week of quarterly contract roll, which means that Thursday we're going to stop trading the December 2018 contracts in the futures, and we're going to roll to the March 2019 futures contracts, which is fine, but what it typically means is that Thursday and Friday are burnt days because the technical traders of the futures, which is what drives most of the market, back off. And so we're not going to see some of the action that we've been seeing. And now, here's the thing. If the market does fall apart in particular during contract roll, it's a bad thing. Trust me. It is not an organized market, and it's going to be a bad thing, but we'll talk about that later. Here's the ES front month futures contract. This is the daily chart of the broad market and futures form. You can see, we came back down this week pretty hard, and we're now testing the lows of the last 2 months. We'll talk about some of this in a minute, but I mean, look, problematically, here's the deal. Like, if you look at it, we closed last year at 26.68 or so, 26.60 on the ES, and now we're down 20 points for the year at this point. We haven't done much. It's still fairly flat, and everybody goes, "Oh, did we collapse and we're about to bounce?" Blah blah. And here's the problem with that. No, you haven't collapsed if people are down 20 points for the year on the S&P. That's literally not even 1%. So that is not a collapse. And we'll talk. And in a minute, I'll get to what really drives some of that stuff. But let's look at the major indices on the daily charts, and we'll go from there. Crude oil, 52.13, hanging near the lows of the year. Gold down up $10.40. This is your warning sign, right? When gold is on the rise. The S&P cash lost 62.87, 62.87. And that's basically, that is a new closing low on the S&P since back in May or April. The NDX, the NASDAQ 100 down 225 points and approaching the lows recently as well. The SOX down 44.97. The Biotex was 109.04. They have not yet made new lows. This is the one that's scary because the saying is, as go banks and biotechs, so go the market. And if this thing cracks that 30 to 50 area or whatever that is, it's been the low of the year, this is going to be a big problem. I mean, we're just going to lose everything that this year has brought us. This one's also troubling. This is the Russell 2000. The small cap indices, this generally leads the market, and this is the lowest close of the year on the Russell 2000. So at down 29 points, that's not good either. Now, here's the thing you have to understand. When markets start to fall apart, and we've had some big down days, but we've had some bounce days, and I know we're near the lows recently, but the other day we've had a broad blend of this stuff. The problem is this. You got the VIX. This is the volatility index, and it's off the mat, and when I say that, the mat is down in that 10 to 12 range, and we kind of sit there for a long time, and then we finally bounce. But if you look back to February and other times of the year, and then the collapses in 2008 and stuff like that, the market doesn't typically bottom until the VIX hits 40 plus. And even though I feel like the drop in February was pretty abrupt, I feel like this drop has been more significant and just looks uglier. And yet the VIX hasn't really gotten above 28 or so, right? And you need to get to 40. So anybody who's thinking, oh, we put in a low and we're trying to find a bottom, I don't get it. I don't see it. That's not how the markets work. So when we get lower and we break the lows of the year on the S&P, and we'll talk about some of that in a minute, then the VIX might start breaking out of that 20 range. And look at back in February, you can see on the left side of this chart, right, a couple days over 40, and that was the bottom of the market. We have not seen that yet. So the trend 1.95, that's a big number, and we've had a couple big numbers. So the 10-day moving average is 1.24. I do just want to point out, if you just kind of look at the market as when the 10-day moving average on the trend gets under 0.85, be worried about a top. And then if the market does start to break down from that point, then you look for the VIX to spike over 40 to be the bottom. Okay? If you take that approach, we got that sell signal in the market at the end of September, and that was the top. And we just haven't had a bottom yet. And anybody thinks that, we're bottoming out. No, we're not. We're in trouble here. 2.5 billion shares on the NASDAQ almost. Is what it is. Advanced decline ratio on the NASDAQ, negative 1347. Not the worst day of the year, but not great. Negative 1,062 on the New York. Google loses 31.50. Apple loses 6.23, which is a new low for Apple. Apple seems to be in some trouble here. Netflix down 17.74. Amazon down 70.06. It's not the lows of the year. It's a big down day, obviously. Tesla down 5.10. And the interesting thing is Tesla's the one that's held up. I mean, look at this thing almost made new highs for the year today, right before it rolled. So it's interesting to see Tesla doing what it's doing. Facebook down 2.21, still near the lows of the year. Goldman Sachs, just a mess. This thing's been down for the year badly, down 4.42 again today. TLT, the 10-year bond ETF, a 20-year bond ETF, up 22 cents. I gotta tell you, I don't think rates are going to go higher next year like some people think they will. And the Dow Jones Industrial Average, we don't watch on average, down 558 points, and that's it. All right, so let's take a look at the intra-week data. We're going to 10-minute candles on the ES, and what you see is that Monday was a Monday. Is that right? Did we have a holiday this week? We didn't have a holiday. Oh, we had the Bush funeral. Okay, so really what it comes down to is this. This is what, so a small gap up for the week on Monday. The opening candle was the high of the week. Didn't sell off much Monday, didn't do much at all. Tuesday opened fairly flat, although we left a small gap above, and then just tanked. Wednesday was closed because of George H.W. Bush's funeral. Thursday gap down, went lower. That was kind of the low of the week, and then we rebounded, tried to fill the gap, and we did on the ES by Friday morning, and then sold off and closed at the low of the week. So is what it is, and here it is on the NASDAQ side, sold off and closed at the low of the week. You can't also miss the fact that we had a 13 buy signal Thursday morning at the open on the NASDAQ here, and that worked out. So it is what it is. All right, so what does this mean for the week ahead? We're going to look at the news, but we're also going to talk about the options and the futures contract roll. We're 2 weeks away from the triple expiration, right? But that's not the only story in town. So here's the deal. Monday, JOLTS job openings, 30 minutes into the market. Tuesday, NFIB small business index. Wednesday, and the PPI. Wednesday, CPI, that's a bigger number. Crude oil inventories, 10-year bond auction, federal budget balance. Thursday, import prices, unemployment claims, that's the weekly initial and continuing jobless claims number, the natty gas storage number, and 30-year bond auction. And then Friday, core retail sales, capacity utilization with industrial production, flash manufacturing and services PMI numbers, and business inventories. But the biggest thing to remember for the week ahead is what? It's the fact that we are doing the contract roll for futures. So on Thursday going to Friday, it's going to be kind of a bust. Having said all that, this does not look good. This is one of the ugly. The VIX is not high enough to say we're even near a bottom. The market hasn't collapsed enough to say we're near a bottom. We obviously have sold off a couple of key days this week, even though we got the bounce back on Thursday. But I wouldn't focus on that right now. There's no bottom here in the market. There's a lot of issues ahead for the economy. We're doing a lot of things wrong as a country. And so, yeah, I think, look, it's lower, right? And then the question becomes, like, there's no point here where people are saying, oh, I don't want to sell stocks because at the end of the year. That's new. That's not a thing. We've had the last couple of years, the rallies at the end of the year. That's not a thing here this year because everybody's, even or at best for the end of the year, which means you can sell off, and which means, with all the tariffs and everything, feels like we're going to have a bad Christmas holiday season, period. And I know some people don't want to hear that, but that's really what it is. And so, yeah, we got to be very careful here. This is a very bad place for the market. I certainly wouldn't want to be an investor. I'd want to be a trader. I want to be on the short side of things. I want to make sure that we're capable of making money on the downside, and that's it. Charts as usual brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple of weeks. Have a great trading week. We have this week with the options roll, and then the next week with options unravel, and then everybody's done for the year. Have a good week.